So we're back. This will be part 2, I guess, if I get up the footage nicely and if it's possible, of course. So staking, basically you want to earn these rebases. So instead of minting and getting this discounted time, you're basically staking it and you're getting a percentage of this time that is minted. Staking is passive, long term, so basically because you're holding and every time you're getting, after each 8 hours you're getting this amount of tokens more and you're staking it again. In the long term you're just getting increasingly more value. Like the more you have staked, the more you get, the more you have staked, the more you get, and you get the picture. Basically you lock your time, but like I said, it's pretty liquid, so you can unstake stake in minutes of time. So this is really nice. I think most other projects require you to stake for longer times, or it's locked up for longer times. Basically what it says, so the most important thing to know about staking is that it changes its name, like its type of token. So the time token in its staked form, so it means locked up, is called memories, or the ticker, or like the symbol is memo. And this is always equivalent on to time. So one memo is always one time. Memo is just the staked version, time is just the free floating trading version that you can trade on exchanges. And staking will burn your memories or your memo, and you will receive your time in return, and this one you can trade. So basically that's just a name change to know for you, to know for the protocol, so everybody knows, okay, this time is readily available, or no, it's locked up in some kind of contract or protocol. Let's go to the minting section then. What is minting? So basically what I said before, minters, they give tokens, they give like AVAX or other tokens to the treasury, and in return for those tokens they get discounted time, and they can either sell this discounted time and make a nice profit on it, or they just can hold this time and they bought time at a cheaper price basically. I actually wanted to do this before, I don't know why I haven't, because I'm just lazy, I guess, but I think it's really good if you just have like for example Ethereum in your wallet and you want to trade it to time, you can basically get discounted time within 5 days. So they're selling their assets to buy a bond, or this minting, vesting, whatever you want to call it, to the treasury. So minting is active in short term. You want to really keep track of it, what the price is of time, the underlying asset that you're minting, because obviously when you keep track of it you can make most profits when it's the best discount, obviously. And you can see this on the side, it will have like percentages of discount towards what it's now. What's Paul? Never heard of this actually. Page not found. Okay, they definitely should update their documentation. Liquidity is called Paul. Paul ensures that there's always locked exit liquidity in our trading pools to facilitate market operations and protect token holders. So basically today want to say there's enough liquidity through a probably automated system that keeps track of what's necessary to be able to provide liquidity, in sense when people would panic, or for lowering fees when making transactions, or for example. Wonderland becomes its own market, so basically they have their own basket, their own liquidity, they can provide this to other exchanges and earn interest on that. So they're really their own market makers in that sense. They can trade their time tokens for other tokens, make a liquidity pool with those tokens with time. So there's a lot of different options. Basically, the treasury increases its revenue on its own, and you can be assured that the team behind the treasury is really one of the smartest people out there, I guess. They're really experienced, and it shows in their action and their aggressiveness in taking action. So I'm really liking this. I trust what they're doing for now. In the future, or like in the mid-near future, probably a governance system would be more suitable when a lot of voices are there, when this project really kicks off. Then it would also be uncontrollable for people to make decisions, so there would be need for some organizing structure to facilitate all this. Basically that's it for minting, I guess. I'm gonna take a quick break here. We saw the basic systems now for what Wonderland does, staking and minting and the treasury. Obviously we'll go more in depth in future videos when I want to research this more thoroughly, because obviously I don't know everything yet and I'm still learning with you guys at this point. But I'm just giving you my 2 cents of what this is. Let's continue with the documentation. So for minting, we're also just gonna do this in a future video. I guess I want to go more in depth with it, because for now I don't know too much about it, and I also want to be able to show it like exactly on the spot how I'm doing it, what you gotta do, and for now I can't do it. I just want to focus on what the project is and how we're gonna evolve with this. So we're just gonna go through quickly bridging, so between different chains you can actually bridge your MIM or your magic internet money, this stable coin, and this will also be possible with rabbithole. We will see this in the next segment, I guess. But rabbithole is basically a container that captures all your different memo and the rebasing that's happened. So basically a backpack where all your stake time, your memo is in it, and all the rebasing happens also directly comes into your backpack. So you get that, and at all times you will have the amount of memo, the rebasing happening, even though your backpack, your rep memo stays the same size or the same value. Well, no, not the same value, but the same amount, I mean. So this amount of rep memo represents this backpack represents all the tokens you're getting. Basically bridging, yeah, it means that you pay gas fees from the chain you're bridging from. So you're paying, in this example, AVAX gas fees to move your Wemo, red memo, I mean, or your magic internet money to another chain like Phantom or Ethereum, for example. But we'll also show this in a future video. Red memo, basically what I told before, is your backpack. This is where all your memo will automatically come, so it will increase the amount of memo you get for one red memo. But the amount of rep memo you have will always stay the same, unless you actually add some extra. But this is obvious, I guess. Well, obvious, I would say it's obvious for me because I already read about it and it makes sense to me. So I hope the backpack reference can help you with it. You can roll with it on your own, but I guess if you understand how it works, the bigger picture, how the systems intertwine with each other and how they're all making sure that one system regulates the other and it's like a feedback loop, a closed system, then you understand where it's going, the project. And that's the most important part in my experience, or in my opinion. So basically what they're saying is how the system operates, or how the protocol operates, and how it's efficiently or optimally used. Basically what I talked before about how there's people minting, providing assets, providing liquidity, and this treasury accumulating it, which makes it give intrinsic value. This intrinsic value is the backing price, and at which point they would start buying back from the treasury. So this would sell off the assets in the treasury to buy back these tokens, this time, and this would drive up the price again, making it go above the backing price. This process does happen manually, like I said, and now they say this would not happen instant, and in theory or in practice it could go below the backing price for a short amount of time before the protocol's reserves step in and they start buying back time from the market. So basically the stakers, they provide their staking, they buy time from the market, which stake then locks up this time. Then there's a price increase because time is then less available, less liquid, and this increase in price is good for the minters then, because there's more of a discount then on their minting of time, which makes it interesting for the minters to actually start minting, and this is like a balance that keeps the treasury growing and actually increases the intrinsic value of the treasury. So basically everything we talked before. Abracadabra is another project of this interesting ecosystem, but we'll talk about it a different time. The glossary, you can go through it if you're really interested, but basically I think it's more important to know how it's working than actually know the equations and what's everything called. Links definitely interesting, but I guess they also were found on their web page. So I think that's it for the documentations. Let's continue with the site. Now for the last part, let's check out the website. So we were here before. I connected my wallet already. If you don't know how to make a MetaMask wallet for the AVAX chain, just search on YouTube. I guess there are plenty of people explaining you how to do this. You just have to connect it now here, and then we get this page. So let's just start to the left with the dashboard. We already saw it, and as I said, the runaway figure or statistic is gone. They don't really care about it anymore because I don't think it also represents anything useful to know. So basically time price, your wrapped memo price, this is your bag, your container. This obviously is worth way more than one time, because in the beginning one time was maybe one container, but after a while in that container you were able to get way more time, so that container becomes more valuable then. The market cap, total value locked up. This is basically what people are staking. Higher staking price means more time price will rise, more price of time will rise, more interesting for minters to mint, which adds the actually treasury balance. So there's like a nice little balance. You have to understand how it works, why people mint, why people stake, and obviously just staking is pretty fine. There are a lot of minters also, and if people stake too much, then minting will get really appealing for more people, so more people would start minting. APY current index, it's now almost at 10, so if you had 1 time in the beginning of the project, you would now have almost 10 time. The backing per time, people are a bit unclear about this, so let me explain how I see it. So most of the treasury is made up of stable coins. I think about $1,200 back in like a month ago was backed for each time, and this may now be decreased because you have to remember, when they're making or when they're rebasing and giving more time to the people, then there's also more time to be backed. So the price of backing per time drops when there's a rebase, because there's just the same amount of money but for more time. This is kind of logical, but people are not always sure why it's happening. And the other reason why backing may increase or decrease over time, because there's also a variable part of the backing, and that's also obviously in the more risky investments. For example, we made recently our first investment in BetSwap.gg, and this is like a betting swapping, BetSwap, yeah, basically a betting website where you can make bets and people can make bets with this token. So we got a lot of these tokens, and they represent a certain amount of backing per time, and when this token fluctuates in price, so will the representation of this backing in time will be. So you have to remember there's also a fluctuating part of this backing per time. So people always think it's like not saying much, but in essence it does say much, but you just don't need to trust it as much as you would think to have. Backing per wrap memo, obviously this is in the same relation to the price of memo and time wrap memo, so this is in correlation. Let's go to the stake session. So when you bought time, and I will show this in another video maybe, you would able to have, like here, put in I bought 0.1 time, and then you can put stake, you accept this, and the first thing you have to do with every new transaction or every new kind of type of transaction you want to make with MetaMask or any other platform, is that you have to approve first that it's okay to make such a type of transactions. So every time you stake or unstake, or you wrap or you bridge, every first time you do a new type of transaction, you have to approve that it's allowed for your portfolio or your wallet to make such a transaction, so such a type of transactions, if that makes any sense. So you basically have to pay 2 times the gas fees the first time you do something new. So you stake your time. In the first place, you will have your balance of your time that you have bought from any swap or something, or you minted it, for example. Then if you stake your time, you approved it for the second time, or you staked it, you accepted, confirmed the second transaction. Then you will get memo. This is the staked version of time. 1 time is 1 memo, and in the sense you want to do this, you want to get this container where all memo is added in future rebases. You can also wrap it directly. We'll see it in a bit how you wrap this, but basically or you can have just all the pieces in your hand, or you can have a container that collects all these pieces for you. It's basically what it stands for. The exchange rate, so this does change. Your container level doesn't change, but the amount of tokens or the amount of memo it represents changes every rebase. So with every rebase you get more memo for 1 container, for example. The next rebase you maybe have 44.2 memo for your container. If you have staked just the normal way, not in the container form, but just the normal, you get what you stake. You will see here what you will get for each rebase. This is pretty nice. I think they're adding it for your container wrapped memo also in the future, but we'll see. And their stated return on investment for a 5-day lockup period would be 9.7. This is obviously not related with the price swing, so last month's time went down, so we obviously didn't get 10% return on our investments. But then again, it's also just a market dip, and if everything was going sideways, it would have returned ourselves 9.7% per 5 days. Let's go to the mint section. Honestly, I have never been here before. I don't mint. But I know back in the days, or like no back in the days, a few months ago, you still could use AVAX, the gas or like the operating token for the AVAX chain. You could mint this or use this for minting, but they deleted this because we had a lot of AVAX at some point, and it was really swinging our treasury if we would keep a lot of it. So we had enough of it, and now we want to get other kind of tokens or liquidity providing assets in our treasury. So for the moment we can use Ethereum. This is wrapped, like the container form, for example. Always when it's wrapped, just think about the container increasing in value, because the amount it can store or stores is just increasing every time. We also have Memo with Mim, sorry, that's in Dutch. This is the pair for liquid providing. This is just a stable coin with a container form in the pair, and then you can also use this to make new time. You can just give the stable coin, or you can also make the stable coin with the time pair, so just the free floating trading asset or token. So basically these percentages tell you how much discount you get here on the side. So if you would now, for this instance, if you made a contract back then and you would now take your discount, you would have about 8% discount. So it's important that you remember that. I think, because I never minted, I'm not 100% sure, but how I understand it is that at the time you make your discount, so you want the price of time to be very low, or lowest possible, and then this percentage is when you actually like take your profits or claim your profits. So it's important that the price of time has risen in that time frame. Yeah, can't use another word for timer, obviously. But in that time frame, if that price has risen, you could, for example, take 8% discount on the set token price you had a contract for buying at that price. Okay, we're almost there. I'm getting my speech is getting real tired, but I'll get through this. Calculator. Basically, for example, if you have like 2 memo, you calculate this APY in the future. In 30 days I would have like almost 8,000 euros, because my investment now would be only 4,500 euros. But if we zoom out, or we take like a little bit more time, you can see this increases pretty rapidly. This is obviously fun to play with. Like after 300 days you would get like 4 Lambos. Okay, I don't know if it's realistically, I don't think it's realistic, because nobody can get 17 Lambos after 1 year unless there's such a large amount of people in the world joining, and yeah, I don't think it would work then if so many people would join, because in essence you have to need exponentially more people. In that way it's kind of a Ponzi scheme. So the obviously critic is that this is a Ponzi scheme, obviously, but the point is we have like a treasury where we have tokens and assets, and these make value for us. So in a Ponzi scheme the only value we get is from other people involved, or getting other people involved, but now we actually have money in the treasury that can make money for us. So in my eyes it's completely different, but in theory the structure is the same. Last option, bridging. I don't want to go too much in about it. This is for an whole other video, because yeah, the different chains I'm not too familiar with it. So yeah, we have only Phantom and Ethereum, and then Avalanche, of course. But I mainly trade on Avalanche, also Phantom, but I don't do anything on Ethereum. So I could only show those two chains, but that's for another video. Basically it's swapping your assets from one chain to another, so it's important to know always on which chain you have your assets, because you can't just normally send tokens from one chain to another. Your tokens would get lost, so usually just stick with what you know, follow people on YouTube. Maybe if I do a more in-depth video of how to do this, you can follow me, but for the moment I would just do the easy way, just follow the main staking and buying of things. So I guess that was it for the video. Maybe a quick summarize of what we want to keep away of, what we want to keep in mind of this project. So basically we're all investing money, we're all risky investors. This is cryptocurrency, and then even one of the most risky investments of cryptocurrency in my eyes, because this is like a venture capitalist kind of project where you want to put money in startups and in new projects, so you're not always sure to get return on your profits. So this is all speculative, of course. But basically you put money in there, you do it with minting, or you do it with buying from the market. Buying from the market increases the price, which makes it more interesting for minters to start minting, because their discount is then higher. And or you put your money in stake value, and you stake your money in the protocol, which locks up the value, and then the price of time will increase because there's less time available for the people that want to buy time from the market. So by staking this time you get memo. Memo is a staked version of time in a 1-to-1 ratio always. You can wrap this memo in your container, making it a basket or a bag, I mean. And in this bag you always get this memo automatically stored, or the value of this memo. So the value of your container increases in comparison to the amount of memo you get for it. So you get more memo for a longer time holding the bag. Basically that was it for the video. In the future video I will go more in depth about each kind of protocol you can use, or what it does. For example, the staking, how it actually looks to stake some time, and how it looks making use of other projects like Abracadabra. See you guys in the next one. Bye.